FTX collapse. From $32 billion empire to bankruptcy in 10 days. Hello, everyone. Today, we are diving into one of the most astonishing events in cryptocurrency history, the collapse of FTX. This isn't just a story of a crypto exchange going bankrupt. It's a tale of billions of dollars, ambitious entrepreneurship, political connections, and the fragile nature of digital finance. By the end of this video, you'll understand why FTX's downfall is considered one of the most dramatic moments in crypto and financial history. FTX, once one of the most trusted and innovative cryptocurrency exchanges, lost its estimated value of $32 billion in just 10 days. Its founder, Sam Bankman-Fried, went from being celebrated as a crypto genius and billionaire to facing multiple criminal charges. But what led to such a rapid collapse of a company that was considered the pinnacle of transparency in the crypto world? Let's take a step back. The rise of FTX and Sam Bankman-Fried. Sam Bankman-Fried started his journey in finance in traditional trading firms, but quickly saw the potential in cryptocurrency. In 2017, he founded Alameda Research, a crypto trading firm that specialized in arbitrage, buying assets on one exchange and selling them on another for profit. Initially, Alameda operated on a relatively small scale, but grew quickly due to the global surge in cryptocurrency popularity. By 2019, Sam launched FTX, a cryptocurrency exchange that promised transparency, innovative products, and professional management, something many crypto investors had not experienced before. FTX rapidly became one of the largest exchanges in the world. Alameda Research acted as FTX's liquidity provider, which raised eyebrows but was not heavily scrutinized at the time. FTX distinguished itself by offering innovative products such as tokenized stocks, crypto derivatives, and high-yield crypto deposits with interest rates reaching 5% for Bitcoin holders. Many investors saw this as safer and more profitable than traditional banks. The exchange quickly attracted a loyal user base and gained media attention. Sam Bankman-Fried became a recognizable figure, meeting political leaders, giving interviews, writing blogs, and speaking at conferences. His visibility built trust. By 2021, FTX was a crypto powerhouse. It introduced tokenized shares of major companies, allowed users to trade advanced derivatives, and even partner with prominent sports and media brands. FTX Ventures and Alameda Research invested in over 250 crypto startups, creating an extensive ecosystem that strengthened the company's influence. At its peak, Sam's net worth was estimated at $24 billion, making him one of the youngest billionaires in history. Warning signs ignored despite its success. There were warning signs. FTX and Alameda were legally separate, yet closely intertwined financially. This blurred the lines of accountability. Many of Alameda's assets were held in FTX's own token, FTT, which made their real liquidity highly questionable. If FTX or Alameda faced a liquidity crisis, selling enough FTT to cover obligations will be almost impossible. Moreover, FTX's rapid growth and complex products attracted attention, but most regulators didn't fully scrutinize the exchange until it was too late. Sam's openness and media presence created a false sense of security. Investors believed FTX was completely safe because the founder seemed trustworthy and transparent. The beginning of the end. The first major public warning came in November 2022, when CoinDesk published an investigation revealing that Alameda's balance sheet was largely dependent on FTT. Out of $14.6 billion in assets, $5.8 billion were in FTT tokens, and much of the rest was also illiquid crypto assets. This meant Alameda's wealth was largely on paper and not easily convertible to cash. The crypto community reacted immediately. Concerns about FTX's liquidity triggered panic withdrawals. Bitcoin and Ethereum prices fell sharply, and fear spread across crypto markets. The role of Binance and Changpeng Zhao. The crisis intensified when Binance CEO Changpeng Zhao announced plans to sell Binance's FTT holdings. This decision sparked a massive 95% drop in FTT's price in just a few days. Investors rushed to withdraw funds from FTX, creating a full-blown liquidity crisis. Sam Bankman-Fried tried to calm the community, claiming the exchange was stable, but the damage was done. Binance initially agreed to acquire FTX to stabilize the situation, but withdrew after reviewing the company's financials, stating that FTX's problems were too complex and risky. This left FTX with no lifeline. Bankruptcy and legal consequences. By November 11, 2022, FTX filed for Chapter 11 bankruptcy, along with Alameda Research and over 130 affiliated entities. The collapse caused approximately $9 billion in losses across the crypto market. Sam Bankman-Fried, once a billionaire, was now facing multiple legal challenges. He was charged with misusing customer funds, fraud, and misleading investors, violations investigated by the U.S. Department of Justice, the Securities and Exchange Commission, and the Commodity Futures Trading Commission. On December 12, 2022, Sam was arrested in the Bahamas and later released on $250 million bail. He is now under strict monitoring, travel restrictions, and required to attend consultations on mental health. Political connections and controversy. Sam was also a significant political donor, contributing millions to the Democratic Party, including a $6 million donation to Joe Biden's campaign in 2020. These connections sparked theories about media bias, regulation, and the influence of political donations in the crypto industry. While these remain speculative, they highlight the intersection of finance, politics, and crypto power. Lessons from FTX. The FTX collapse provides important lessons for investors. Transparency is critical. Don't trust surface appearances alone. Diversify risk. Relying on a single asset, especially internal tokens, is dangerous. Regulation matters. Young markets without oversight are highly risky. Community influence. Social media and news coverage can accelerate financial panic. While devastating, the collapse also pushes the industry to improve. Funds and exchanges are now more careful about risk management, and investors are more selective in choosing projects. The crypto ecosystem becomes stronger as it learns from these crises. Conclusion. FTX's rise and fall is more than just a story about a failed crypto exchange. It's a cautionary tale about trust, ambition, and the dangers of unchecked growth. Sam Bankman-Fried's story reminds us that even the most successful ventures can collapse quickly if financial practices are flawed. For the crypto market, the FTX saga serves as a wake-up call. Regulation, transparency, and risk management are not optional. They are essential for building sustainable financial systems. As this story unfolds, we will continue to watch the legal and financial repercussions closely. Remember to subscribe, and comment if you want more updates about FTX, crypto scandals, and financial news. Stay informed, stay safe, and always research before investing in digital assets.